Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive in there. Let's take a look, see what's going on. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com. That's where I dive deeper into all of these topics, looking for potential investment opportunities, sharing those opportunities with everyone in the community, sharing why I like them, answering your guys' questions about whatever you'd like to ask me, and I'll give you whatever information that I know that I can give you. I can't give one-on-one consulting or anything like that, but I can definitely share my journey of going through this commodity bull market, and I can show you what I like, what I'm doing, and how I'm positioning for it and my strategies around it. Discount coupon code is a coupon code that is active if you're looking to join. So Monolith Investments, this person says, reflecting back on this year, the biggest learning for me is that when you think a thesis is super compelling and you start feeling comfortable, step back and humble yourself. Constantly thinking about what can go wrong will discipline your position sizing. Well, I mean, there's a lot of things that we can think about around a lot of this stuff here. So, a thesis doesn't mean you can have a thesis like, for instance, this is about uranium, that we've got a uh, a demand supply deficit where demand is exceeding supply. We have a deficit, and that higher prices will come. But it doesn't mean it will happen within your arbitrary set of time frame. It doesn't mean that we know exactly when it will occur and all of that stuff. And that's where I get confused. The thesis is correct, the thesis is right, and it's going to come. The question is when, and guess what? No one knows that answer. Absolutely no one. So your position size is a function of how well you believe in what's going to happen, but you don't know when it will happen. And we can go through multiple cycles where we get inflation, disinflation, and then inflation again, disinflation, and we are bridging over multiple cycles for the uranium bull market. It's not all in one cycle. So here's a huge misconception that people have. It's not about looking back and humbling yourself necessarily. It's about understanding how these cycles work. They move in waves. You can look at Elliott wave analysis, and I'm not saying that Elliott wave analysis is the end all be all because it's not. Technical analysis isn't the end all be all. There's no one thing that somebody can point to and say it's the end all be all. All you can do, and with what's within your control, is to make sure that the tailwinds are still behind you in terms of the fundamental uranium thesis of supply, demand, and the deficit between those two. And then you have to understand that the markets don't go straight up, they move in waves. So you get these waves that come in, they cycle back and forth. They're called cyclical waves. It's the shorter term waves that occur over time. And what you're playing is the secular, which is the big long term 10, 15, 20, 30-year thesis. So what happens is people get really frustrated. They get annoyed that the market doesn't do what it's supposed to do in their mind, in their minds, their time frame, and as much as it goes up of what they think. What you think doesn't matter. What you need to do is become a student of the game. You need to change to what the market will give you. You need to adopt strategies and position sizing to what the game will give you. It's about learning the game. It's about learning the cycles. It's about learning that these things don't go up in straight lines. And that's where people get really, I'll say, in trouble. It's the disconnect between what they expect, expectations, and reality. And the gap between expectations and reality is their frustration with the market. And that frustration in the market is what basically pushes them over the edge and leave that investment. So what I'm going to say to most people is that your investment time frame is too short. It's too short. You have to learn how long these things take, learn that there's waves, and learn that it's not going to occur in a very short time frame. And what ends up happening is a lot of people, they buy at the wrong time because they get emotionally charged. They have too short of a time frame, and then they generally sell with a loss. That's the majority of people, and that is your default setting from coming into the world. That is what everyone is set up to do. And if you're going to learn the game, you have to figure out, well, I have to buy when nobody likes it, and I have to have a longer time frame than everyone else. Now you're giving yourself a competitive advantage. And maybe what Warren Buffett does is he bridges himself over many market conditions. So he doesn't care about the market condition. He just wants cheap, good value in a very good company and then ride it through many market conditions. That's his approach. And then understanding about successful strategies and approaches will help you become better at investing. Says my biggest investment mistakes were not buying enough of the ones that were really good. And that's really difficult to do because what you have to do is you have to find out what is really good before it is good. And it's really hard to do that. It's hard to know the traits and characteristics of something that could return very well over many years and get that right off the beginning when it's the cheapest price to buy. It's basically being able to take a large position size at the best time to do it and then know at least enough to ride it long enough to give you this gigantic return, to let the asymmetry work. And it's really hard to do that. Josh Young says OPEC Plus is supporting the oil market, repeatedly cutting and delaying production below $85 a barrel. So, if you take a position in oil, at least you know you've got an ally, OPEC, and their cutoff seems about $85 a barrel. The OPEC production cuts versus WTI price 2022 to today, you can see some of these cuts that were done here. So they announce, extend, extend. How to Become Rich by Mark Minervini, however you say his name there. Opinion. He says, go where the money is. I chose Wall Street because there's unlimited opportunity. If you develop great talent, the sky is the limit. For a sunset, you must head west. Number 2 is forget about money. Instead, focus on being the best. The best in any field will get paid very well. Invest in yourself and develop talent. Money is a natural byproduct of being great. First, you get the knowledge, then you get the experience, then you get the skill, then you get the money. Number 3, think in decades, not in years. We tend to overestimate what we can do in 3 to 5 years and underestimate what we can do in 10 to 20 years, and that's your time frame. I was just describing that not that long ago about time frame. Number 4 is leverage yourself. You are only one person. You can leverage your efforts. Social media is one way, a blog, a podcast, writing a book. Number 5, live modestly until you're at least a cash millionaire. I didn't even own a new car until I had $1 million cash in the bank. Until then, I worked and saved and kept my expenses very low. Actually, that's exactly what I do, or what I did, I should say. Number 6, follow my 10% rule. Only buy highly depreciable asset with no more than 10% of your net worth. This is a good rule to follow forever. So anything that's highly depreciable in terms of an asset, do not spend more than 10% of your net worth on it. Number 7, only lend what you're willing to give. This is especially important with friends and family. By adhering to this principle, if you don't get paid back, you don't sweat it. And you don't lose relationships over money. Number 8, never lay odd. With every business deal or investment, I always get odds on my money. The odds are in his favor, so to speak. And then number 9, the last one, consider your savings at zero always. If and when some unforeseen event or emergency occurs, which it will, and you need to break into your savings, ask the following question. What would I do if I didn't have this money? Then do that. Never touch your savings. If you didn't have that money, would you find a way to survive? Yes, you would. So those are his ways to become rich by following those things. The market leader, IPO base. So this is an IPO base. This is a decline. You actually have a double bottom here, bottom 1, bottom 2, and then you draw a line across here. You break out, then you do a, and then you go into a very big institutional advanced phase where institutions accumulate shares. We are going through this exact cycle here in commodities. And I want to show you exactly what that looks like. So you can see that this double bottom and then the breakout retest, it's in a whole bunch of different things here. So, so if we were to go up, and we were to go to something like COPX. So COPX, if you look, there's your downward move, your double bottom, you come up, this is that move that here, and this is going to be institutional accumulation that's coming. And it's in all of these charts, guys. It's not in, one or two. So this double bottom here is that. You draw a line across through here, and then you break out, and you get that move. It's the same exact fractal that we see here. And then what comes next is going to be institutional buying that comes here after, right here. That's going to drive it on up in stage 2 move. And it's like this across a whole bunch of different things. They're almost all like this. So commodities are what this book is basically describing, even though it's how to win at trading IPOs and super growth stocks. It's the same thing, the same pattern fractal setup. Coming down with Patrick Karam, he says crude oil versus the S&P 500. In over 100 years, only 2 times has crude oil ever been this cheap. Or is it the SPX that is historically expensive? Well, it's a combination of 2 things. How do I know that crude oil is that cheap? Well, you can price it against other things. It doesn't have to be just against the SPX. You can price it against gold, and it's the cheapest time it's ever been against gold. So energy is incredibly cheap right now. And this is the chart that he's got. 99 was incredibly cheap. We got cheaper than obviously 99 in 2020. And here we are again, way down here in this cheap area. And he's got 2002 as the closest analog where we come up and we pull back. And I think that's going to be here, that we're the analog here. Now, it doesn't have to be a perfect fractal. It just has to be that we come up, pull back, come up, pull back. And it's roughly the same type of fractal. What I think is going to come next is a move that goes all the way up here where he's got these question marks. If we go back to the 1980 high, the move in oil is going to be ridiculous if we do that. You could also consider this to be a double bottom here. We had a big move down, big bottoming pattern, and then if we can come back up, even if we hit this level here, where the question marks are in the middle, still a huge move. And a lot of the equities, if you can find the equities that have growth, which is rare and few in the oil space, they're going to outperform, I think, Here's my guess. Um, Not from today, but it could be from today. But out in the future, at some point, I think oil stocks and maybe natural gas with it will be the best performers in the market at some point. I also think that physical metals will do incredible things. I don't know, when you start looking at Bitcoin, I don't know how that's going to behave because it's only existed under the Nasdaq bubble phase. It like it started when it was at the bottom of the Nasdaq bottom, and it's we're in a Nasdaq bubble right now. If this reverses, which every time this reverses here, from 99 to 2008, NASDAQ didn't do very well. From 72 to 1980, NASDAQ didn't do very well. So I don't think the NASDAQ is going to do very well, or the S&P 500 in this time frame. And that's where the question comes up. Is Bitcoin like the NASDAQ, which the way that it looks like it trades almost identical? Is it going to follow the NASDAQ sideways or lower during this time frame? And oil and gold and silver just rip it? Or is it going to disconnect from the NASDAQ? And I don't have that answer. There's not enough history. If I couple the Florida couple, they say the levels of wealth we see as we see them. So 850,000 is comfortable. 1.1 million is pretty rich. 1.65 million is semi-wealthy. 2.3 million is wealthy. Do you agree? Well, I don't I don't know what this is compared against. It's all relative. And I think it depends on where you live. So $850,000 in a small city in South Dakota with no income tax and all this other stuff might be richer than someone who has 2.3 million in a very expensive state in an expensive city with high costs. That also, I don't know if this means that they own their house and that's their cash balance, or if it's just the cash balance, but they have a lot of debt with it. But I would assume that wealth is the difference between your debts and what you've accumulated in terms of your assets. So I think it just highly depends. Wealth is also, I think there's a huge thing with a state of mind. I don't need a lot. I haven't spent a lot of money in my life, and I feel very wealthy. A lot of people feel like they need to spend a lot of money, and they may feel wealthy, but they're broke as heck. So I think it's a state of mind and peace of mind, coming to peace with yourself, that having a bunch of crap isn't really going to make you any wealthier. Um, I can tell you this, what I try to do is I want to be healthy. I want to be an ox. I want to be strong. I want to be something that most people envy that money can't buy. And you can't buy your health, so to speak. It's a discipline that you have to do. You have to eat healthy, you have to work out, and you have to do things. So my goal is more on the lines of my health versus having some sort of like inanimate objects around me that kind of just cloud your judgment. The things that you own start to own you, and in terms of psychology, in terms of cleaning them and dusting them and changing, oil changes, all that stuff. It all starts, it's just a pain in the butt sometimes. So, the money is one aspect, but I also think your health is a huge aspect, and wealth and health kind of tie together. Um, would you rather have a bunch of money and be, unhealthy and fat and having problems? Or would you rather have a little bit less money and be extremely healthy and fit, where maybe you're 50 years old, but You can still compete with 25-year-olds, not all 25, but some 25-year-olds with things. It's like, I'd rather be healthy. I don't know. Benjamin Graham says if he is the right kind of investor, he will take added satisfaction from the thought that his operations are exactly opposite from those of the crowd. Says Benjamin Graham. And that's where you make all the money, though. You have to do it opposite of the crowd. You cannot get outsized returns by doing what the average person does. It says, give me a fish and it'll eat for a day. Cut a fish into quadrillion pieces and it'll eat for a quadrillion days. I don't know what that means, but so this is a big a debate, and I have my opinions on it, and I'll give you my opinions around it. So it says if one Bitcoin is sold in units of sats, and there are over 2 quadrillion of those, how can they claim scarcity, lack of dilution, hedge against inflation debasement? This would seem to be common knowledge and, well, math. It's true to some extent. So what I said, I posted this a long time ago, and I think Lynn Alden responded. Um, I said, you can always double something in size. Double, 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 double. Bitcoin is the exact opposite. You can always cut it in half, cut it in half, cut it in half. And that's what she's saying. If Bitcoin is sold in units of sats, and there are over 2 quadrillion of these, how can they claim scarcity? Well, the value of Bitcoin is measured in dollars. So what people do is they're saying, look at me, I'm getting rich in dollars. And the dollar is increasing the market cap for Bitcoin. And what people are mad about with the current system that they're mad about is that they complain that poor people and middle class get wiped out through inflation, and that they're mad that rich people who own assets become wealthy off of inflation, and poor people and middle class do not. My argument is that Bitcoin is the same exact thing that they are arguing against. Because the market cap is going up, and because you can continually cut Bitcoin in half, in half, in half, in half, everyone who's adopting Bitcoin is just loading all of the existing asset holders, quote, asset holders, that already own Bitcoin. They're making all of the existing holders rich. And what they're doing is they're increasing the market cap of Bitcoin in terms of dollars per coin. So if people continue to pile into it, the market cap will continue to go up, which means that people are fighting over the scraps or remains that are left in Bitcoin that are cut in half, cut in half, cut in half. And then the dollar value will continue to pump the Bitcoin higher and higher under the scenario that I am describing. So the very thing that Bitcoin was set up to protect against is the very thing that it's creating in itself, if that makes any sense. Their opinion would be, well, if you have a piece of pizza, which is your 200 and something million Bitcoins, you cut that pizza into smaller slices, that the pizza doesn't grow. And it's like, it does because you're measuring it against dollars, which is increasing the market cap. So what people are trying to do is they're trying to suck money flows into Bitcoin to increase the market cap, which means your pizza size is growing, but it's growing at the rate that people have already adopted it. The existing shareholders are the ones who get rich. It's not the new entrants. The new entrants are making the existing holders richer. So if you don't play the game, then that can't go up. They need to continually have that market cap increase. If the market cap declines, then the price of Bitcoin goes down in terms of dollar value. So here's Bitcoin. This guy's making a point here. He says it got hijacked by the CIA in 2011. It's deviated from its original purpose of being a peer-to-peer electronic cash system. It's not future-proof. It's expensive. It's slow. It's not private and basically a public bank account. It's a glorified NFT with no purpose other than gambling, which is true. It really is true. Warren Buffett says the beauty of stocks is they sell at silly prices from time to time. And that's how Charlie and I have gotten rich. And I'm going to continue to post this chart when he does too. So, posted this chart at the blue breakout 12 months ago, saying 13-year blue mega breakout was extremely bullish. Then got a runway move after the breakout. Been saying since 2019 that we'll get a minimum of 10 to 15,000 during this third bull move. The chart is on track. And this is the breakout, the consolidation, breakout, consolidation, breakout. And the third bull move, which will kill the present global monetary system. So let's just assume that the current monetary system will be dead. I'm just going to say this. More than likely, the Federal Reserve and the government know that. They know that the current system, monetary system, will be killed, most likely, according, and agree with this. If they agree and they know, why are they telling everyone to go jump into Bitcoin? Have you noticed that we're trying to become the crypto capital of the world or whatever they call it? Trump. How come they never mention gold or silver? Now, some people say, oh, it's because it's digital, it's new, blah, 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 blah. Guys, they want you to be there. They want you to go buy Bitcoin. Why? Why do they want you? Why are they coming out and talking about it? They don't want you to be in gold. Why? Because you can transact out of the system. They want you to be in Bitcoin because they can control it. I don't want to be controlled. I want to be out of the system. I want to be undercover. Just keep that in mind too as you accumulate assets. How does a 15-year consolidation in AEM, that's a gold mining company, resolve? Higher, not a bearish looking chart. We're in a consolidation here and it's starting to break to the upside. Looking pretty good. And that's where I'm going to end it, guys. So give me a thumb up for the content, subscribe to the channel, subscribe to the website, and we'll see you guys next time. This is Finding Value.